I'm curious. What would have to happen in order for you to buy an investment property with me? I mean, for you to buy an investment property with anybody.
All right. So I think we've really, or hopefully brought some light to the downsides of why buying a property with someone else is a terrible idea. But there are circumstances where it does make sense, and I'll go through them. Number one is there's the world of syndicates. So for anyone who isn't aware, syndicates are an idea of like doing group buys, and there's like literally there's some that are listed on the ASX.
Yep.
Which are just like big syndicates. You can REITs and things like that.
Real estate investment trusts.
Yeah, there's also unlisted ones and a whole bunch of stuff that goes on in that world.
Yep.
Now, the reason why I'm going, okay, if you're interested in buying a property with someone, why might this be an approach? Is because you have the ability to buy and sell your share. It's not as connected to another person. Now, noting that it's a highly unliquid market, so it is even less liquid than some other ones, but at least it gives people individual options because of the nature how it's set up. So I think that if someone's really into the idea of buying property with other people, that is a world they can explore.
Totally.
But it's a whole different world to like buying houses that are actually yours, right? It's the difference between like starting a business and buying a share on the share market, right?
Greatest analogy, because it's not like you can influence the products that Apple are producing versus the products that your own business will produce.
Well, I mean, I have shares in my super and they're in the ASX 200. I'm pretty sure Coles is in that list, right? I shop at Coles, but there's not much I can do to influence it.
Are you telling me you've never written them a letter?
Well, I would assume I also have Woolworths shares. So as long as everyone keeps eating, we're good.
Just don't shop at IGA.
You look hungry right now. Have you thought about a meal?
So I like this point. I think the only caveat though is like, do you just go back to it? All the family members and the friends are just like, go and buy a REIT, go and buy some shares.
Well, I would honestly protect a lot of relationships.
Would,
so when you come down to this, what is often not spoken about, ask anyone who's done it what's happened to the relationship with the person they bought a property with.
Totally.
Yeah, like I'm sure there's examples where it's gone well, don't get me wrong, but the overwhelming majority, it doesn't go well and it actually does a huge amount of damage. So in the case of the person I know in this family business, it's conflict between the brothers.
Totally. Yeah.
It's not a happy discussion, even though like they're very well off because of this land. Or just imagine this, right? Let's say you and I did buy a property together and then I had triplets and I'm like, dude, I got to sell this property. I got triplets on the way. And I'm sure you would be understanding, but is that still not how do we expect that to go well?
Totally. I would never let you forget that for the rest of your life too.
Completely. So you stand the chance of doing damage in a relationship with someone you care about.
You know, the scenario that kept coming back through my mind that I could see this working, notwithstanding it still has a significant amount of risks.
Don't you dare steal my answer. You stop right there. I'm finishing this and then I will give it and you can decide. So where does this work? All right. I would buy a property with you under the following circumstances, Grant. If we were going to do a development and at the end of the development there was 2 titles and you had one and I had one, I would do it. Because there's a clear distinction where we're separate after it. So there's a set amount of time that we can agree in that hopefully I know building and all the rest of it comes out of it from there. But in that type of circumstance, I would be cool with it. Because,
very similar to what I was going to say. But because there's a key component to that, which is what I was going to focus on, is the project itself. So it's a finite, specified period of time with a loosely outlined expenditure. Noting that building costs have like doubled. So it's like, sure, like then there is a set criteria of completion.
It's an exit.
Exactly. And so the other thing that was running through my mind in addition to that, so if you were to go and build, I don't know, buy a block, build 2 townhouses, you get a townhouse, I get a townhouse, like the thing is done, it's done. The other one was flipping of going, cool, like we're going to buy a place, renovate it or get other people to renovate it and we'll flip it within 12 months, 24 months, what I just used it as an example. There's a finite endpoint.
Pause it there. I literally in my Apple Notes have that written down if they change stamp duty.
Oh,
so
dude,
if they change stamp duty to land tax and flipping becomes viable, I have actually thought about hitting you up for that.
I'm just calling it. We should set that up for a TV show. We could be like the flippers in Australia. Like, you know, all the American guys, like people that do flipping.
I'm going to put it out there right now. Is the TV show better be successful? Because I'm not sure our flips will be successful.
Oh, they'll be entertaining, that's for sure.
Definitely. I can promise that.
Watch my pillow hands go and swing a hammer. It'd be great.
It's always fun. Like I've spent a bit of time in the building industry, right? I've actually done a lot of renovations as a plumber.
I've watched people like you build stuff.
Yes, you have. I'll tell you what, I wouldn't hire you for your handyman skills, that's for sure, Grant. Anyway, the point being, what I always found really funny with renovations, right, is people would go into these renovations with the idea of making money, and I'll just watch their decision-making because they weren't in the industry about the irrational things they would do that just wouldn't increase the property value. Like, did you know white basic tiles and then like really expensive tiles, like the cost increase in the really expensive tiles versus the like what the property will be worth? Really not different.
I have friends. One of them bought these amazing downlights at $500 each, and then they flipped it. And then another one bought these amazing Italian tiles and did all the bathrooms with these things, and then flipped it. And then they bought another place and like, we're never buying those tiles again. That adds zero value. And they like went to like whatever the tile joints in Australia is, and it's like a tenth of the price.
Yeah, people don't, and just to clarify a point, in a premium market, the things we've said might actually work, right? So if you were to be in Rose Bay, those types of downlights or really expensive tiles might be essential in your flip so that you meet the needs in the market.
That's fair.
But that's not what people do. People in average suburbs put in things that should be in Rose Bay and then wonder why their flip or renovation wasn't successful. Fascinating. Anyway.
I'm in charge of buying tiles. Got it. Thanks.
In the conclusion of this point here is that when there is a set exit and set rules and really even shorter timelines to independence, right? I would think that up to 3 years is okay, but I don't think anyone can forecast their life really that well past there.
And
have intentions, but shit happens.
And factory buffers as well. Like everything's going to go awry when you're doing those projects and stuff like that. But dude, this is the things that scare me mildly.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into creating wealth inside and outside your business, check out the full episode by clicking the link on your screen or in the description right now.